Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, January 16th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, we are still inside the range we've been in for over a month now. Continuing to build out this range, very narrow range of price action over the last month or so after tremendous strength in Q4. We've also compressed within that range as well over the last 4 to 5 sessions here, developing a very narrow range here heading into this holiday shortened week. Continue to hold here at or near that 48.50 level, and perhaps a little bit of an expanding range continuing to develop. We could continue to see this range develop here. Maybe a push to the upside gets rejected back down and continue to build in this range until proven otherwise. Eventually, a failure, perhaps at 4,700, could open up a bit more of a rotation back down, perhaps filling a gap or rotating back into the previous quarter's midpoint. Until then, we're still range bound. We have a holiday shortened week with volume and volatility coming back early on. Keep an eye here on the bottom of the range. Any failure at 47.70, 47.75 could open up some weakness into the bottom of the range here over the course of the week. So right now, opening up here as this thing continues to develop here within the narrow range over the last week and over the last month. Overall, this market remains very bullish and still holds at the highs of the check mark of Q4 within this super narrow range. So again, we could continue to build out compression here until proven otherwise. Failure at 4,700 opens up a return back toward the previous quarter's midpoint. Taking a look here at the NQ. Right now, the NQ showing similar price action to the ES, only a little narrow range here developing over the last several days. Still stuck in the monthly range here as well. Again, last quarter, a tremendous check mark quarter higher to go outside quarter up, and now maintaining those gains a bit right here. Again, keep an eye on the previous month's midpoint. Any failure here, and you may be opening up a return back toward the previous quarter's midpoint. Still an uptrending market as of right now, but very, very, very staunch resistance here above. If we do push to new highs again, perhaps the development of an expanding range continues to play out at these highs until proven otherwise. From a near-term perspective, short-term 4 or 5 day range here that has developed. Failure at the center of the range, you open up the bottom of the range, you hold the middle, and you may have a push toward the upper end. So when you're at the center of a range here that's developed over the last month, we could continue to see activity within those boundaries and test those boundaries. Given the move we're seeing to the upside, we may see a push to the upside, find a new high, and maybe swing back down and continue to build within that range. Taking a look here at crude oil. Crude here, currently about break even. You've noticed the range that has developed in crude over the last month as well. To begin the year has been a range that is on top of itself. Up a day, down a day, up a day, down a day, down, up, down, up, down, up, down, up. And then this was a rejection, and now here we are, and we're still at the center of this range. We're still trading just around the previous month's close, previous year's close. Still trading near the previous month's midpoint. I mean, this thing is just compressed, as compressed as it gets here, chopping around. We're still in a downtrending market overall. That is a downtrend that has been intact. We have a shallow lower line here, and if we break at 70, it could open up a pretty hefty decline into 64 down below. 64 is the next market structure edge below. 74 is the next one up. This tail right here will be very important. If price can push through 76s at some point with some juice, it can open up a bullish seasonal move higher, perhaps toward 80, the previous quarter's midpoint, and then further higher into the 84 market structure edge at the top. So again, big time range here, building a ton of energy. I've mentioned before, this range here has at least 10 to 12 points of energy in it, which means an expansion phase of 10 to 12 points. But it could be even higher than that. It could be somewhere north of 12 to 15 points once this thing really unravels. So again, still building it out here. We could continue to see chop until directional conviction is established. Once that occurs, we have a big breakout that could be ahead. Taking a look here at gold futures. Gold trading lower about 0.4% right now, still trading near the center of its key range. We talked about this large key range here that developed and how price would likely stay mostly in the center. 50% of that range until proven otherwise as it builds out, and that has been the case. We're now in this lower portion of that range as well, and still we're seeing price unable to find acceptance above 2100, unable to find acceptance above 2080, and after a strong high that could continue to lead price back down within the large 4-year range. At some point here, if we fail to hold that 2030 2015 zone here, it opens up a test at the edge and could provide a continuation downward toward the center of the larger range here, which is about 1850 or so. That could be quite the move down into the center part of that range if we see a big time break here of this lower trend line. So still building out, ton of energy here developing. A push through 2080 with juice could open up a retest of that strong pivot high. As of right now, that's a day one high, and the action right now is sideways off that high but with a downward bias at the moment. Still have a long-term trend that's pushing higher, but overall stuck at the center of this larger range until proven otherwise as it builds energy. Lastly, taking a look here at the YM. This one's down about 0.3%. This is the one that's perhaps the most compressed of any of these markets. It had the most juice in Q4, the strongest unidirectional trending move we've seen in a Q4 in a very, very long time, if ever. And the resulting move to begin the new year is super, super compressed sideways price action. Something we talked about heading into the new year. If we're going to have an outlier event straight up, we could begin the new year with an outlier event sideways. Very, very narrow compression, and that's kind of what we're seeing at the moment. Overall, this market has been unable to really push through that 38 level with juice, and instead we're kind of forming this little bit of market structure here above 36.8. If at some point we fail to hold 36.8, that could be quite bearish, and at some point we could be returning back toward the midpoint of the previous quarter, the 200-day moving average, or any of these value metrics down below. Finishing yearly value last year or current composite VPOC. So again, that could be quite a bit to return to, but until that happens, further development of this range could be in play, which means if we drop down, it could be a fade back up. If it pushes higher, it could be a fade back down until proven otherwise. So still in the ranges here as we begin a 4-day holiday shortened week. Looking to see how this plays out here the rest of the week, but again, any failure to hold support could open up a bit more rotation back into the gap fill below for the ES, the NQ, and the YM. All right, that is it for now. We'll see how this develops here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.